So on a 50-year, let's say you have to sell after 5 years and you borrowed the $500,000 I was originally speaking of. At the 7.5, you may have paid it down by $5,500 after 5 years. Let's just say the
on a
rate was
50 year.
on a 50-year after 5 years at 7.5%. You will have paid it off $5,500. Let's say it was at 6.5%. I didn't run numbers on that, but let's just say you may get another $2,000 out of that, maybe, if you're lucky.
What's up, y'all? Derek Peterson here, the Austin home guy, real estate agent with Compass. I've been doing this for 11 years. I'm here with my buddy Kyle, who has been a lender for even longer than that. How you doing, Kyle?
Good. I invented the mortgage, actually. That's how long
I've
been doing this. Yeah.
You've been
Yeah.
long
It's all
enough
me.
to invent.
Yep.
Well done. Well, apparently they're inventing a new mortgage, the 50-year mortgage. Let's jump straight into that. What are your thoughts on the 50-year mortgage?
Yeah. I mean, I've seen some fun stuff on social media about it. So my first thought was, comparing a 30-year and a 50-year is kind of like comparing a 30-year and a 15-year, except a lot different once you actually crunch the numbers. When you look at the rates on a 15 and a 30, let's just say for simplicity, the difference is 1% in the rate. When you look at,
And
say,
that's just to be clear, that's typically standard when you go from a 15-year to a 30-year, right? On a 15-year note, you usually get a better rate?
yeah, it's usually actually better than a point, really, when you're comparing
Okay.
a 30 and a 15. It's actually you get a little bit more than a point, but just for the sake of running numbers between a 30 and a 50, I just say, well, let's say a 50-year would be a point higher. You have to assume that a 50-year would be a higher risk to a bank, so they're going to cap on, a little bit more, rate, interest rate to it. Just for fun, let's say you're borrowing $500,000 on a 6.5% rate. Your principal and interest payment is $3,160. So let's say you did a 50-year mortgage because you want to save some money. Let's just say that rate's 7.5. Well, that payment is $3,201 on a $500,000 a year loan. So 30 years actually going to be lower anyways.
So the math ain't really math in there.
The math doesn't math, dude.
Not if they increase the interest rate at all. So what about the number? Do the numbers look better if it's the same interest rate on a 50-year note compared to a 30-year?
I mean, so I didn't run on a 500, but let's say on a $400,000 loan, your payment would be $267 less.
So saving about $267 a month. What would be the long-term implications, maybe some of the things, because my concern with all of this from the real estate side of things would be oftentimes people are going to, they get into their first house, they're willing to, so say somebody's willing to, man, that extra $300 a month or so is worth it. So we save that $300 a month. That allows us to get into the house. How does a 50-year mortgage impact their equity compared to a 30-year or a 15-year even?
So on a 50-year, let's say you have to sell after 5 years and you borrowed the $500,000 I was originally speaking of. At the 7.5, you may have paid it down by $5,500 after 5 years. Let's just say
on a 50-year.
On a 50-year after 5 years, at 7.5%, you will have paid it off $5,500. Let's say it was at 6.5%. I didn't run numbers on that, but let's just say you may get another $2,000 out of that, maybe, if you're lucky. So you haven't really paid it off a whole lot. And you have to assume,
so for example, if you're doing, let's say you're doing a VA loan on a $400,000 house, 0% down. You own this house for 7 years and you have paid your note down to $392,500.
300 what now?
Basically you've paid your note down $7,000.
Oh yeah,
and some change.
Yeah. If you borrowed $400,000 originally, you're saying?
Yes.
Oh yeah. Sorry, I thought we were still on the 500. Yeah,
that's insane. That doesn't even cover one side of a commission if you're paying a real estate agent 3%.
No, it does not. no. And even
Wow.
after 10 years, you're still going to be less than $20,000 paid off.
Yeah, that's insane. So basically, you're and granted we're assuming that the home values like if we're saying okay, there's no growth in the market, which that's not very likely. You are, but the beauty of owning a house is that you're building equity in two forms, right? You're not just relying on the market, you're paying the house down as well. So as you're paying the house down, that also allows you to grow in equity as you are, as the market is hopefully tailing up. But
Yeah.
essentially,
Unless
with
you're
the
in a
50-year,
declining market.
and if we have any major adjustments again, like we do now, then that 50-year mortgage basically wipes that completely out.
Yeah. So in my
Interesting.
opinion, it just doesn't make any sense. And then, if God forbid, you're the person who, needs a 50-year mortgage because you want to save that $300 a month, chances are you probably didn't put a whole lot down to begin with. So if something were to happen, life changes, if you do have to sell, there's a really fair chance you don't have a whole lot of equity, if any, and it could be in a negative situation. Title fees, you've got to pay your taxes have to be paid up when you sell. And then of course, you have commissions as well.
So
So
you're
that's
saying
fun.
that on a short-term turnaround, these 50-year mortgages could also force people into foreclosures or short sales in the event of an emergency.
If you can't write a check at closing, yeah, perhaps. Or, in the worst case scenario is if you're in a situation where you can't even make your mortgage payments anymore at all. That would be, the quickest way to a foreclosure for sure. So, um, if you were to ask me, do
Well,
I think they're ever going to come around? No, I don't. I don't think. I think it's just something that's been brought up. Um,
and
so
this is me throwing you on the spot, and I may delete this whole second half of the conversation if needed. But have you looked into the portable, whatever they're calling them, mortgages?
no, never even heard of that.
This was the other idea that Scott Bessent threw around. I saw the other day where he was saying uh basically a mortgage that allows you to keep the current interest rate on your house. It's just transferable to a new property.
Okay, what bank's going to do that?
Correct. That's kind of what I well not to me this we haven't explored any of this, and I haven't heard people talk about it on any serious level yet.
Hmm.
I've heard a number of people talk about the 50-year mortgage similarly to how you did, where the math doesn't math if you're looking at an amortization schedule. But on the potable stuff or the portable loans, if these ever came to fruition, you're also almost punishing first time home buyers. You're punishing basically people that haven't been in the market. You're making it even more challenging for them to get in the market because now you have all these people that purchased when interest rates were between 2.5% and 4% that are
Yeah,
not going to give up their interest rate. So those people are going to be more competitive in purchasing houses if they're able to keep that interest rate than somebody that's not.
yeah. I mean that, and the bank that's holding your current loan is going to have to go and you know just change the property that they have a lien on.
Yeah,
I mean,
none of this stuff makes. I don't know how
I would
any of
think that
that
they'd want to
math
get out
would
from
work.
underneath these loans.
Yeah, correct. Exactly, because they want something with a better interest rate anyway, right?
Yeah, I mean,
And restarting a mortgage
they're
is
not losing money on it necessarily, but they're not exactly getting rich off me either.
yeah, which that is the point of a bank, I guess.
I suppose
So
the part of that would make sense is if it's assumed that they're not going to recapture that loan, whatever I'm paying in interest right now at 2.5. I do have a 2.5. I want to say it's like 500 a month right now, if even that. So I suppose the thought of losing that 500 a month might be better to just keep it and then transfer it to another property. They're not going to add to that loan, of course. So, if I have a $300,000 loan, I want to buy a $500,000 house, and I'm going to have to bring that $200,000, to make up the difference. They're sure as heck not going to add to that 2.5. So, in that aspect, I suppose that can make sense because the odds of, who's holding my loan now of recapturing my business are probably pretty low.
Gotcha. Okay, so that then there is a world in which that could make sense depending on, you basically I'm curious if that would be contingent on. I'm assuming the house that you have the note on has to sell as well. There has to probably be
Yeah,
some
it would
things
have to be a
simultaneously
simultaneous.
working.
Yeah, it'd have to be a simultaneous close, which I've done. I've done that before. Of course,
Yeah, we've all
closing
done
one.
them. Yeah,
Yeah,
closing
so
one,
I
closing
mean,
the other right after.
that would be the only way that would make sense is them being paid in full at the same time, moving that whatever I owe to the next one.
Yeah, I guess that would make sense. That's probably a little bit more feasible but again, you're kind of rewarding people that potentially bought at the
Yeah,
uh,
and I don't know
you
who's going
know,
to process those loans either. I mean, it's not going to be a loan officer. There's in no way, shape, or form like you know, my company has like $700 billion in servicing. There's no
yeah.
way to pay a loan officer to do that. So obviously, there has to be some sort of fees involved because you're going to have to pay whoever's processing the loan from from one house to the other.
Yeah,
Um,
it's gonna add a probably an additional couple of percent in fees
yeah,
on the transaction. So,
it actually
which would
makes
make
more
sense.
sense than a 50-year mortgage. If they're not obviously the same thing, as far as what we're comparing, but at least that almost makes sense because if you're getting $500 a month from me now, I'd rather have $500 a month than no dollars a month if I'm a lender. But at the same time, that also just I'm just trying to make some sense out of what you brought up, but at the end of the day, it doesn't make that much sense to me to do it.
That well, yeah, it makes makes about as much sense as the 50-year mortgage at the moment as well.
Yeah,
So we'll
I,
see.
I to be
We'll see
honest,
if either come to fruition.
almost I could almost see something like that happening. I don't know what lender would do that. I mean, that feels I don't know. I
Yeah, I mean, to be honest, the correct answer though, in my opinion, is the overall markets. We want market stabilization, right? And so, like there's a couple of things in my opinion I think that need to happen, which is look, interest rates if based on home prices historically, and I know interest rates if you compare them to historical, data are still relatively low comparatively. The difference is that home prices are astronomically different
yeah,
compared to where they were, when interest rates were at 15%. You know, paying 15% on a $80,000 house isn't that crazy. Paying 15% on a $400,000 house is
is
bananas.
insane. Yeah,
Yeah.
they're not even
And so like
comparable. I don't even say the word we're still at a historic low because it doesn't make any sense. I mean,
yeah, I mean,
I mean,
we're at a historic low because home prices are at a historic high. So it's there's a level of necessity to offset some of that. And I think both need to adjust. I think home prices need to continue to come down. I think interest rates need to come down. I think we've got to get insurance under control. And in my personal opinion, I don't think I don't believe that any hedge fund or large capital investment group should be able to buy residential real estate. So I think
no, that's
commercial
kind of where the
apartments and
50-year
things like that.
mortgage kind of feels like that's where that would lead to.
Yeah, like when we talk about if we really want to change things for the better for people, then like the irony is I've heard a lot of people talking recently about uh this may be different from you. I'm actually curious about this without getting too political. A lot of people are saying that illegal immigrants have come into our country and purchased a bunch of the houses, which is why there's a housing shortage. And I've never personally sold a house to an illegal immigrant in the 11 years that I've been doing real estate, but I've probably sold 15 houses to different large investment firms that
Hmm.
purchased off market or a distressed property that they could then put a little bit of money into and turn around it. I mean, I just did one earlier this year. So that was basically a subsidiary of BlackRock. So, and they swooped in, paid all cash, and my sellers got out of the property, which is what was necessary. They paid more than what we could get if it was a regular buyer. So we accepted it. But I think the bigger danger, in my opinion, is watching some of these large cash heavy investment firms come in and just purchase residential real estate.
Yeah, I don't think illegal immigrants were buying houses unless they're paying cash for them. It didn't cross my desk because I mean, if anybody, any sort of foreign national, I mean, that's well, that's someone that lives in a different country. But if you're from another country, you have to have a work visa, and we have to prove that that work visa is not going to expire. So that's obviously those aren't illegal immigrants. So I don't know which ones are buying homes. It didn't cross my desk,
Yeah,
anyways.
I was gonna say they would have to be heavy cash, and even on a heavy
It'd be
cash
100%
transaction,
cash.
yeah, there's
But even
I
then, you
don't
still have
see
to have an ID to buy a house, right?
yeah,
I mean, you're at title
correct.
company. Don't they take your ID and
They do.
notarize the closing docs?
Yeah, they do allow you could purchase the property with an ID from another country. They do allow foreign investors in the country.
Right. I just don't think it'd be a
I just
primary
don't see that.
residence, right?
Yeah, I don't
Like
think it's a
you wouldn't
primary
claim that as your
residence.
homestead.
Correct. I'm pretty sure that it doesn't it doesn't operate like that, but
Yeah,
I
I don't
could
know
be
that
wrong
for
on
sure.
that.
But yeah,
I've
that's not
never
something I've ever looked up.
yeah, and I don't have a large database of international clients that I work with personally,
I don't
so
either. A lot of mine were
it's
coming in
interesting.
from other states, but not other countries.
Yeah, correct. Well, dude, this has been good, man. Thanks for sharing, and I think it's going to be helpful for a lot of people.
Yeah.